$250 billion, my old banker brain is short-circuiting.
You're blinded by the headline. Transaction volume is actually down 17% this quarter.
But value is up 26%. We crossed 1.2 trillion. The Megadeal is back, Maya.
The Megadeal is just Elon buying Elon for $250 billion.
Peak corporate synergy.
It's a giant shell game. Let's look at the actual math on this SpaceX's xAI structure before my head explodes. The rundown.
So I guess Uber finally realized that making me wait 12 minutes for a Camry that smells like stale vape juice isn't the ultimate luxury experience.
You are so dramatic. But yes, Uber buying Blacklane is fascinating. They are pushing hard into the premium chauffeur market.
It is a pure margin play. You get corporate clients paying 3 times the standard fare, and suddenly your unit economics look like a real business.
Exactly. Though I want to see how they integrate a white glove service into an app built for gig workers.
Speaking of cash, Intel is spending $14.2 billion to buy back a 49% stake in their Ireland fab joint venture.
$14.2 billion to buy back their own capacity. I read that filing 3 times just to make sure I wasn't hallucinating.
Classic corporate strategy. Sell the house when you need cash, buy it back at a massive premium when you panic.
It is not panic, Nate. It is yield control. They need total ownership of that facility if they're going to pivot their foundry model. Sharing economics on a next-gen fab is a nightmare.
I just think tying up $14 billion in physical assets right now is a heavy anchor when everyone else is moving asset light.
You cannot print chips in the cloud. Someone has to pour the concrete.
Fair. Let's pivot to Texas. Soluna Holdings just closed on the Briscoe Wind Farm, 150 megawatts for $53 million.
That is the one that caught my eye this morning. They are projecting a $10 million boost to Year-One Adjusted EBITDA.
Wait, really? A nearly 20% yield in year one?
On paper, Texas wind is notoriously tricky with grid curtailments, but if they pull that off, it is a brilliant little bolt-on acquisition.
We love a gritty bolt-on. Meanwhile, the gossip mill is spinning on Estée Lauder and Puig. Whispers say they are deep in talks for a massive tie-up.
Mostly stock, from what I hear.
Which makes sense given the current cost of debt. Oh, and Gilead just extended the tender offer for Arcellx again. They are keeping the market in absolute suspense.
The lawyers are probably just fighting over a comma in Section 4.
They always do. But all these deals feel like appetizers. We need to talk about the massive elephant in the room. Or should I say, the rocket in the room.
$1.2 trillion in Q1 deal value. A 26% jump, all while deal volume actually dropped.
Because when Elon Musk drops $250 billion to smash SpaceX and xAI together, it skews the entire global market. The big one. $1.2 trillion in a single quarter? I had to refresh my terminal 3 times this morning just to make sure I wasn't hallucinating an extra comma.
Your terminal's fine, but the underlying math is what actually fascinates me here. Deal value is up 26% year over year, but transaction volume actually dropped 17%.
The undisputed return of the Megadeal.
Exactly. Nobody is buying the middle market right now. We are just seeing absolute titans throwing GDP-level cash at each other to secure AI dominance.
Which brings us to the $250 billion elephant in the room. 4 of the 6 biggest deals this quarter were AI plays, but SpaceX acquiring xAI is on a completely different planet. Pun fully intended.
$250 billion. I read the press release twice, and I still feel like I am taking crazy pills.
See, I actually love this structure. Hear me out. You have the ultimate space and hardware logistics company buying a frontier AI model. It is vertical integration on a cosmic scale. Imagine Grok optimizing Starlink satellite routing or running autonomous Mars landings.
Nate, please stop pitching me. It is Elon buying a company from Elon.
It is a massive strategic consolidation.
It is $250 billion of paper wealth moving from his left pocket to his right pocket. Who exactly negotiated this? Did he just sit across a boardroom table from himself wearing different hats?
I am picturing him spinning around in a chair really fast to answer his own term sheet.
Exactly. But seriously, unique governance aside, I dug into the fairness opinion. They are valuing xAI at roughly 200 times forward revenue. Not earnings, revenue.
You are looking at it like a traditional software multiple. You cannot value artificial general intelligence like it is a B2B payroll platform. You are buying the actual future of compute.
I am looking at it like someone who reads balance sheets. A $250 billion price tag for an AI model is steep, even for space money.
The market is validating the thesis, though. The sheer gravity of this deal single-handedly dragged Q1 M&A out of the winter slump.
I will concede that it makes the quarter look incredible on a chart, but it masks how sluggish the rest of the market actually is. If you strip out AI, traditional corporate M&A is practically a ghost town.
A ghost town where Intel is casually dropping $14.2 billion to buy back a fab in Ireland?
Okay, fair point. I actually have the filings for that Intel buyback right here, and the structure they used for that joint venture is weirdly defensive.
Let us talk about what Pat Gelsinger is actually doing in Dublin, because I think everyone is misreading this move. Voices. I am looking at this note from the syndicate desk, and they are calling Q1 the, quote, definitive return of the corporate megadeal.
I read that same note, and I actually laughed out loud.
How can you argue with it? Deal value is up 26% year over year. We just crossed $1.2 trillion for the quarter. The big checkbook is back.
The big checkbook is highly concentrated, Nate. You cannot call it a broad market return when transaction volume is actually down 17%. The middle market is completely frozen.
But the experts are right about the catalyst. It is an absolute AI land grab right now. 4 of the 6 largest deals this quarter were artificial intelligence plays. You cannot ignore that momentum. It is like the dot-com boom, but with actual working product.
I'm not ignoring it, but I am looking at the math. The only reason we hit $1.2 trillion is because Elon Musk essentially moved $250 billion from his left pocket to his right pocket.
You're talking about SpaceX buying xAI.
Exactly. You back out that one incestuous mega transaction, and your 26% surge suddenly looks like a rounding error. That is not a healthy M&A market. That is just one billionaire consolidating his cap tables.
Spoken like a true skeptic, but you have to admit it sets a valuation floor. When bankers see a $250 billion print, it makes every other tech founder think they are sitting on a gold mine.
Which is exactly why volume is down 17%. Sellers want 22 times revenue because they saw an AI headline, and buyers are looking at the actual cash flows and walking away.
You are ruining my narrative with your logic.
That is literally my job.
Fair point. Speaking of walking away, or maybe not walking away, there is some serious chatter blowing up my phone about Estee Lauder.
Oh? Are we finally getting movement on those Puig rumors? Spill the tea.
I am telling you, the whisper numbers on this Estee Lauder and Puig tie-up are getting very loud.
A predominantly stock-based deal. Which is wild to me. Have you looked at Estee Lauder's chart lately? If I am Puig, I do not want that paper.
Oh, come on. It is a classic luxury roll-up. Estee needs the prestige fragrance portfolio, and Puig gets the massive global distribution network. It is a perfect marriage.
It is a marriage where one side is paying with depreciating currency. Why cash out for a struggling legacy brand stock? Show me the actual cash.
Because bankers can sell a turnaround story. They will pitch this to Puig as buying in at the absolute bottom.
You just love the massive advisory fees.
Guilty as charged.
Speaking of deals dragging out, what is going on with Gilead? They just extended the expiration date for their RSLX tender offer again. The market is completely in suspense.
Yeah, that feels like somebody found a skeleton in the data room. Or regulators are just breathing down their necks.
My money is on a messy footnote in the clinical trial data. It almost always is with biotech M&A. You think you are buying a pipeline, you are actually buying a liability.
Fair point. Hey, did you see the Uber rumor? Word is they are buying Blacklane.
The premium chauffeur guys?
Exactly. Uber wants that luxury footprint. Next time I call a ride from the airport, I fully expect a guy in a tuxedo offering me chilled, sparkling water.
Nate, your passenger rating is a 4.6. You are getting a 10-year-old sedan with a broken air conditioner, no matter who they acquire.
Wow, brutal and entirely accurate.
We will see if Uber actually pulls that off, just like we will be watching tomorrow to see if Danaher can finally drag its pending $9.9 billion acquisition of Massimo across the finish line. Tomorrow's radar. I'm setting an alert for Gilead tomorrow morning. They just extended the tender offer for Arcellx again.
You think it falls apart? I just see standard regulatory foot dragging.
4 extensions is not standard. Read the filings. Someone is getting cold feet on the valuation.
Hard disagree, just a strategic pause. Speaking of purgatory, I'm watching Danaher tomorrow. That $9.9 billion Massimo deal needs to show a pulse.
We do have an actual ticker change happening. Rival and RTB Digital are finally done. They start trading under RTB on the NASDAQ at the bell.
A digital ad merger? How retro. I'm way more interested in the beauty aisle gossip. Did you hear the whispers about Estee Lauder and Puig?
A massive, predominantly stock tie-up.
Which is just banker code for refusing to borrow cash at these rates.
I need to see a term sheet before I buy that narrative. If it leaks into an actual filing, we'll tear it apart tomorrow.